Hello everyone and welcome to this Austmine webinar. I'm Sheldon Varco, the Membership Manager New South Wales and South Australia here at Austmine, and I'm pleased to host you today for our webinar on the year ahead in METS. Before we begin, I would like to acknowledge that I'm hosting this webinar from the lands of the Gadigal people. I also acknowledge the traditional custodians of the various lands on which you all work today and the Aboriginal and Torres Strait Islander people attending this webinar. Today's session will provide METS organisations with expert insights on the major business considerations, challenges and opportunities for the year ahead. Next slide, please. We'll begin with a presentation from our CEO, Christine Gibbs-Stewart, who will provide an outlook from Austmine on the key themes impacting the METS sector in the year ahead. We'll then be joined by an expert industry panel who will provide their perspective on the critical business issues for the METS sector, engaging in a discussion about market activity and mining technology investment, ESG and sustainability strategies, digital transformation, collaboration and new business models, and more. Joining us, we have Peter Johnson, the Chairman of MapTech, Nima Sherpa, the Head of Strategy and Integration, Global Innovation and Ventures at BHP, Ivan Gustavino, Managing Director at Atrico, and Dominic Dowling, the Technical Director, Sustainability and Climate at GHD. This is also a fantastic opportunity to have the panel answer your questions that you have about the year ahead in the METS sector. So you can use your Q&A button at the bottom of the screen to send your questions over at any time. And I definitely encourage you to utilise this opportunity. So without further ado, I'll now hand over to Austmine CEO, Chris Gibbs-Stewart, to kick things off for us. Thanks, Chris.
Thanks, Sheldon, and great to be here today and joining you and our panel to reflect on and discuss what the year ahead will bring to the METS sector. And happy Tuesday to you all. That is the number 2, as it is 22/2/22, and hopefully the date will bring luck to you all. Now, in what we're seeing and through the conversations we're having, we've identified 5 themes as critical to the METS sector in 2022 and beyond. And you can see those on the slide here. And allow me to explore each one of those in more detail to provide some food for thought to what the panel will discuss following my brief presentation. So next slide, please, Wendy. So first of all is reconnecting globally, and it's certainly a time to reconnect. As you know, exporting is the lifeblood of many METS companies, and we have spent the bulk of the last 24 months in isolations. We have been conspicuous by our absence at major trade shows, and there is no doubt that travel restrictions have been detrimental to exporters. Good news is that our international borders opened this week, certainly making things easier to reconnect. But we're aware that some restrictions still apply in certain countries because of our high COVID case numbers here. Despite our dormant state, there have been significant advances from a government bilateral and even multilateral trade agreement perspective. And in case you aren't aware of this news, this includes the conclusion of the Australia-UK FTA, or Free Trade Agreement, which is the most comprehensive free trade agreement since we signed a free trade agreement with our near neighbours, New Zealand. There is work on and progression of the Comprehensive Economic Cooperation Agreement with India, a major trading partner and a strategic ally of Australia. And we've also just concluded the negotiation of RCEP, which is the Regional Comprehensive Economic Partnership, which includes Australia and New Zealand and countries in North Asia, including China, Japan, and Korea, and Southeast Asia. And when all of it's concluded and all countries have joined, it will be the world's largest free trade agreement. Now, despite adapting to what's been happening around us and communicating with customers online, there is a recognition that to be effective, that direct interaction with overseas customers is a much. And as they say, you've got to be in it to win it. And there's a number of important trade shows coming up this year, which we'd like to encourage you to participate in. And you can see them there. PDAC in June, Expo Nor in June as well, Peruman in September, and IMARC in October. And these are just a few of the trade shows which will go ahead this year. Next slide, please, Wendy. No surprise to you that decarbonization is certainly a key theme to the year, and it's linked closely to ESG, but worthy of its own discussion. Decarbonization has really emerged at the top of the sustainability agenda. Executives from the world's leading mining organization have pledged to achieve net zero Scope 1 and 2 greenhouse gas emissions by 2050 or before. And while organizations are still formulating their pathway to achieve that target, decarbonization will shift the expectation on suppliers. METS should expect to field more questions about emissions reduction, energy efficiency, and environmental benefits earlier in tendering processes and contract negotiations. METS will also be expected to ensure that their own supply chains adhere to decarbonization targets and should look to craft their own strategies and policies. Now, we're certainly seeing significant opportunities for METS companies to innovate and proactively drive mining decarbonization forward. And while some solutions for electrification or diesel reduction exists in the market, new technologies need to be developed to create real step change in curbing emissions. And I hope you know about the Charge on Innovation Challenge, which we've been a part of. And this is really an early example of the industry working together to develop these new technologies. Next slide, please. There is no doubt that we'll continue to face disruption despite the world beginning to reopen. Whether it's the COVID impacts, supply chain issues, or the geopolitical tension, external pressures will mean continued careful navigation of our businesses and reversal or turning in a different direction if needed in order to respond to the environment around us. Fortunately, over the past 2 years, the METS sector has dealt with disruption and continued to grow, and we've been very lucky in many respects. What we have found at Austmine is that when the going gets tough, the tough get innovating, and we have seen METS organization over the period manage disruption through more flexible work practices, embracing digital systems, and collaborating with customers and partners. There has been development of and launch of new products, including retooling for opportunities outside the METS sector itself. The period has been driven by a high level of collaboration as we connect in different ways to solve new problems, look at new ways of working, and extend our network, and perhaps as well, look a little closer to home for new opportunities. Next slide, please, Wendy. The digital innovation imperative. Mining technology businesses certainly have emerged as one of the few winners from COVID-19 disruption, with the pandemic really forcing operations to bring forward digital transformation initiatives by several years. This has shown mining organizations that accelerated digital change is possible and that a transformative impact on operation is being achieved. The application of digital technology has shifted across recent years. Initial implementation really focused on targeted operational productivity and efficiency improvements. Focus then turned largely to utilizing technology to increase safety and support field workers. COVID-19 moved this to investment in infrastructure and systems to support remote working and workforce management. And now digital is increasingly being leveraged for ESG purposes, especially in the monitoring, measuring, and reporting of environmental compliance and sustainability targets. The focus on digital has led to a boom in mining technology investment, and cloud native and global technology companies have increased their focus on mining as this digital transformation trend continues to pick up pace. Next slide, please, Wendy, thank you. Collaboration being commonplace and something that Austmine has been talking about for years. And as the industry seeks to address our challenges and make the most of technology opportunities, collaboration has become critical to the industry. As you can see on the slide, 64% of METS companies in our 2020 survey reported that they are involved in collaborative projects. And this has been a significant increase in recent years. Australia's mining innovation ecosystem is truly the envy of the world. Across countries, various networks and programs have been established to track technology development and facilitate greater cooperation between businesses across the mining value chain. Open innovation programs have emerged across the industries that target critical issues and difficult to solve operational challenges. I already mentioned the Charge on Innovation Challenge, but we're working on such things as the BHP Supplier Innovation Program, the Oz Minerals Think and Act Differently Incubator, the Thinking Critical South Australia, and the Rio Tinto Pioneer Portal, just to name a few. To be successful in the future of mining, METS companies must be excellent collaborators. And now, with all the challenges we are facing, collaboration is not just a project opportunity, but a strategic imperative. So those are my opening comments. Again, some food for thought for the panel, and I'll hand over back to you, Sheldon, to take us further.
Excellent. Thanks a lot for that, Chris. It's a great overview for what the discussion will go into shortly. And from an Austmine member perspective, if there's any themes there that you'd like more information on, or any ways that Austmine can help you navigate them, please get in touch after the webinar, and it would be great to discuss that further with you. Now, moving on to our industry panel discussion. So I'd like to welcome Peter Johnson from MatTech, Nima Sherpa from BHP, Ivan Gustavino from Atrico, and Dominic Dowling from GHD. Now, I'll start with a question here for Ivan. So Ivan, in Chris's presentation there, she briefly mentioned around the boom in mining technology. So in the last few years, we've seen mergers and acquisitions accelerate in this area at unprecedented levels. So what do you see as driving this, and do you see this continuing in the year ahead and beyond?
Yeah, I think Chris covered quite a few points of what those drivers are. And if we look at the mining companies, picking up on some of those themes of, ESG, decarbonisation, they still want to increase their productivity. They need to have new discoveries. I think the new leadership forming is more tech native, which is also driving an adoption of technology. And I guess a desire for more commodities globally is driving the mining companies to change their behaviour and take on some risk and adopt technologies a bit quicker than they have done in the past. So that, I think, is a major trend being driven out of the mining company itself. Then on top of that, you've got the strategic type of buyers in the market, groups like Epiroc, Sandvik, Orica, Indexes, Weir Group. They're all looking at their particular, what they deliver in the value chain to their customer and the demands they're getting from their customer. And they've got significant white spaces or gaps in their offering, and they want to fill those gaps. And the mining companies want to try and simplify the way in which they take technologies on. And if they can get it from, single groups with a broader solution set that they trust, this is having an impact in terms of the strategic type of acquisitions you've been seeing accelerate, and those groups growing very rapidly through acquisitions and mergers. And that will continue in terms of consolidating and aggregating quite a diverse set of suppliers in the marketplace. On top of that, the other new trend we have probably over the last 4 years is cheap money. We've never seen that before, and that money being available has brought up a lot of activity in private equity. And those private equity players, such as the Hexagons and the Burnhams and Jollymont RCFs, RSC Ambrians are coming in and putting some risk capital to work inside some of those technology opportunities and taking them to market. What that means in summary is it's a seller's market right now, and there's a lot of demand, and therefore those companies are in a good position to command fairly good valuations and so forth, because there is a bit of a race on to be the aggregator and to supply what the mining companies are demanding.
Excellent. Thanks a lot for that, Ivan. And I guess that's great news for our members, and very interesting point you see there about the race to be the aggregator. So thanks a lot for that. Now over to you, Peter. So in looking at development of mining technology, we have seen the industry to embrace different models of innovation. This has gone from in-house development to co-funding, and now there's some more open sourcing in the industry. What models do you see moving forward being adopted by the industry?
Yeah, thanks, Sheldon. Well, I think in the long term, and I think large segments of the industry are starting to sort of figure this out. But I think in the long term, the fundamental requirements for technology development models are that they are sustainable in the outcomes, and that the results that are achieved are sustainable and robust and maintained over this sort of effective life that they're expected to operate in this environment, which in the mining industry could be years, quite easily more than 10 years. So I saw a presentation from Adrian Beer at METS Ignited earlier in the week or last week, where he said there's no shortage of clever people with good ideas, and there's no shortage of technology, and there's no shortage of problems to be solved, and there's no shortage of money to pay people to do that. But he said the thing that's really lacking is the ability to build a sustainable business model around technology and around intellectual property to create something that will last and that will grow and that will be stable and everything else. So I think, and I think we are starting to see a shift towards the industry engaging with METS in a way that is cognizant of that and supportive of that, and probably a bit more. There's a lot of companies that do very well and are quite experienced at it, but at the smaller end of the scale, I think there's a bit more maturity in thinking about how do we approach the commercialization, delivery, and the development of technology products so that they are still here in 3 years' time, and 5 years' time, and 10 years' time, which is really will be a great outcome for the whole industry. I note Christine's slides on 64% of companies are already doing collaborative projects with customers, which is good. But collaboration, if there's not a sustainable, commercial model and some thought that's gone into that in advance, can really lead to a bit of a dead end in technology, where the innovation gets done and then no one really can manage to maintain it and support it going forwards.
Excellent. Thanks for that, Peter. Definitely some food for thought. And that statistic for us was quite surprising, as it was much lower in our previous METS survey. So it's pleasing to see that going forward. Yep. Excellent. Now over to you, Nima, for the BHP perspective on this. So following on from what Pete's discussed there with these new models of technology development, how has BHP approached finding the technologies that you need to grow the business, and is there some success stories that this has uncovered?
Yeah, thanks, Sheldon. So BHP certainly open source and work with our partner companies quite well through our commercial supply innovation, and also have this in-house development in our technical teams through examples like digital factories. But particularly in the growth and disruptive innovation realm, we find breakthrough technologies by utilizing ventures as our capital arm and innovation as our R&D arm. And so because we've got that external facing nature with BHP Ventures, it kind of acts as a front door to position us as approachable and open for business. And it connects us with ecosystems outside of the mining industry as well. And we're adding value through more than just financial capital in that way. So we're partnering with these people and companies to apply technology to our assets, but also looking beyond normal horizons of solutions. Because what we're really trying to look at is the low technology readiness solutions. We're also investing in co-developing in earlier stages, so working with companies and researchers to scale and de-risk their technologies. And we're engaging with over 600 companies a year, building relationships with startups, universities, global VCs, related networks, and really we're trying to get that best-in-class talent in technologies from a global level, including from sectors outside of mining. But some of our examples for success stories so far is our investment in Jetty Resources, which is developing a novel catalyst for more economically recovered copper from low-grade ore. Also, another example would be work with Cobalt Metals, which is using machine learning to basically revolutionize exploration for new deposits. and circular, which is using technology to trace metals from mine to market, so people can be sure they're getting a cleaner and greener product.
Fantastic. It's good to hear some of those success stories and how BHP, I guess, is approaching that technology development from a few different aspects there. You did mention some of those areas there, but are there any, I guess, priority operational areas that BHP is focusing on? I know in Chris's intro, she went through some areas that I know are of interest to mining organisations as well as the METS sector. So is there any particular focuses there for fast tracking innovation?
Yeah, and as Chris mentioned, I mean, it's kind of booming right now. So there's amazing technology out there, but we also always want to be able to link what we do back to what it means for BHP and connect it back to our purpose. So we align a lot of our focus areas to some of our key BHP missions. So firstly, we're absolutely committed to decarbonizing our core business. So that means renewable power generation and long duration storage, means electrification of our site and our fleet, displacing diesel via low carbon and alternative fuels. We're also working with partners to help them reduce their carbon emissions. So looking across the value chain, particularly in like steel making, which, you know, for BHP, it represents around 12% of global steel production. Secondly, we really want to look at our growing resource base, which is critical, especially in future-facing commodities like copper and nickel. So the world needs them to decarbonize. So utilizing things like machine learning to gain more insight on exploration, but also looking at investing in novel extraction methods are definitely important. And then we're also focused on improving WAIO iron ore by exploring novel methods of removing gangue material. So there's a lot of work happening in synthetic biology and nanotech there, and eliminating tailings as a material risk. So looking at innovative filtration and dewatering methods.
Fantastic. And yes, I know there's a number of technologies being developed in all of those areas. So it's quite an exciting time. Coming back to you, Ivan, on you mentioned some of the market activity, and you mentioned some organisations there who are engaging in a lot of this. So where do you see, what technologies and solutions do you see attracting the most interest in the industry?
Okay. Well, I guess when you've got groups like BHP putting in some focus into certain areas, all those areas are exciting, they're interesting, they need to be addressing the sustainability and a strong ESG driver. You know, money isn't going to be released into any type of mining operations going forward if it's not actually meeting certain hurdles. And I think this key driver has come on a lot faster than most people probably thought about initially. And, you know, the compliance around ESG is going to lift immensely and quickly. And therefore, there will be some tech players who are stranded around not shifting quick enough. And hopefully the work Austmine is doing and some of the points Chris raised is quite a key element to addressing that for our export industry. But, you know, from a tech perspective, you know, all the general, you know, names, AI, ML, in-field labs, I think is pretty big with groups like Kronos, data platforms to get across the vertically broken up silos we have in mining. IoT, sensor tech has been, you know, really well accepted and a lot of investments going into that area. You know, drone automation, digital twinning, AR, VR, you know, 3D printing, all those tech names go on and on. But, you know, the type of groups around that would be, you know, let's say for discoveries, you know, one was just mentioned was, you know, cobalt. There's Goldspot, Geoscan, Sensor, a local Australian group just listed. And, you know, Earth AI, these are all attracting venture capital and a lot of investment into improving the discovery process. In terms of productivity, you've got groups like Propeller attracting venture capital, Emercent, Aerobotics, or attracting money. Then from sustainability, you've got listed companies like K2 Fly that are getting a bit of presence. Groups like Adobe and I4 Mining, who are, creating a series of products and offerings for the sustainable side of the marketplace, which is in high demand. So I think all of those are matching the trends we've talked about before. All those technologies are not single offerings, they're being integrated. Sitting behind some of that track and trace would be blockchain technologies as well. So, and they're being built in, and I guess that would be Circular, would be probably operating with something like that, I'm just guessing. I think what's attracting people into this marketplace now is the investment returns. We've never had, I guess, a view to mining tech being an investment class, and it's now arrived and become an investment class. And so you've got the early groups that were around some time ago doing, the first type of investments 20 years ago. Some venture capital, some private equity players took those early moves, and now it's consolidating into more of a global phenomena. And this is being picked up through even mainstream press, like the New York Times or AFR and Financial Times. This is very different. We've not seen mining tech getting that type of visibility. And we've got groups like METS and the Mining Journal that have been stalwarts and communicating these types of success stories. But to move into Main Street is pretty nascent. It's only been the last few years where we're getting a bit of attention. And I think what sits underneath that is when you're looking at money and how you get it to work and how you get a return to investors, there's a lot of digital type of plays, a lot of, the metaverse, a lot of different things that people are putting, financial tech, DeFi, all these things coming through. But industrial tech it's hard, it's difficult. And therefore you can actually build barriers in terms of an investment class, looking at the way in which you can procure and manage and exit your investment activity. So I think it's quite attractive to, private equity, venture capital, corporate venturing like BHP is doing, high net worth individuals, all the people who have made money from their mining ventures who want to actually back some people now, family offices, and the strategics, some of which I mentioned earlier, that are really active. They are, they're operating from the money end of the scale through to the value added end of the scale and bringing that to bear in this market. Hopefully that answers that question.
Excellent. Yes, for sure, Ivan, and I'm sure that gives the attendees just an idea of just how much activity is going on in this mining technology space at the moment. It's really quite phenomenal. Yeah. And Peter, just coming over to you for maybe a few final comments about this space. MapTech as a largely digital business that's grown over the years. So where do you see this space moving in 2022 and beyond?
I think right now and probably for the next couple of years, we're sort of in a bit of a perfect storm for mining technology, because the technology components and the capabilities that are available to be deployed and to be used in that environment are all the time just generating more and more information, more and more data. And it's like every week there's something new, and there's some new data that you can use, and you can connect that in different ways, and you correlate it and make understanding out of it. And for our work and for many other companies in this sector, it's just gold. It's terrific because there's all these new insights and new value to be added. And at the same time, there's a fairly stark skill shortage within the industry, and the commodity prices are good. Everybody wants to take advantage of that while I can, and so the way to actually get improvements and gains built into the existing operations needs to be done smarter. There is opportunities in all that new data that's being made available. There is opportunities in the commodity markets and the environment that we're in. And there is a restriction, a really great difficulty in not having the numbers and the types of skilled people available to actually get everything done. So we're just seeing a vast increase all the time in all sorts of areas. Anywhere that helps a mining company consume and understand the data that they're able to achieve, that they're able to collect. Anything that increases the speed and ease and efficiency of getting even mundane sort of tasks done will be popular at the moment, and a lot of that is in solution areas that are focused in mine operations, because most mining companies are trying to run things as hard and efficiently and as profitably as they can at the moment. If you can solve a problem in that space that doesn't involve hiring people or makes the existing people more effective or more efficient, we're seeing a really receptive market. So,
fantastic. Thanks a lot for that Peter. I'll now introduce Dominic Dowling as what I'll call our resident ESG expert for this panel discussion. But just before I do, we do have a couple of questions coming through from the audience. But if you do have any questions for our panel, please pop those through the Q&A box, and we'll get to those very shortly. So Dominic, we have had, I guess, a discussion that's touched on different points of ESG, and it's definitely the top priority now that's being discussed by mining boardrooms globally. So how do you see this impacting, I guess, the supplier engagement and procurement space, and how can you see METS keeping ahead of the curve here?
Yeah, thanks, Sheldon. And you're 100% right. We are seeing a really increased focus on ESG, and particularly in light of recent local and global events, Duke and Gorge, Glasgow, big push on decarbonisation, some really significant climate change events, and obviously increased investor and activist pressure. But as we've heard too from the panelists today, the ESG space is really broad. So we're talking about the environmental, social and governance. And whilst there's a big focus at the moment on carbon, I think we need to not lose sight of the other elements that make up ESG. We've got the water with climate change, waste materials, discharges to air, land, water, community, health, wellbeing, safety, human rights, stakeholder participation, economic development. So it's a really broad area, but that big focus that's coming through from the boardrooms is meaning that there's a cascading of obligations through the supply chain, because the supply chain has such a big influence on achieving those outcomes, or conversely, not achieving them and the resultant risks. So what we're seeing with that cascading is more pressure, more responsibility and more accountability for outcomes. And that's aligned with those increasing stakeholder expectations, investors, proponents, local communities, traditional owners. And so what I'm seeing is there's a real diminishing of the days of ESG being considered optional or a nice to have. And accompanied with that is, I guess, decreasing acceptance of non-committal motherhood statements around best endeavours, which often come through in proposals. And I guess what I've seen working with different clients across all different sectors is, rather than accepting what might be put forward in the ESG space in the first instance in proposals, is actually tightening those up and coming back multiple iterations to get the commitments right. We're also seeing that there's some big packages of work being sole sourced or a competitive ECI process with trusted partners where ESG is a core part of that selection process. So how can METS organisations keep ahead of the curve? A couple of thoughts on that. One is to learn and upskill around ESG. What does it mean? Why is it important to clients and stakeholders? And then to map your activities against those ESG principles. And then look at what you can do and what you can't do in order to focus on those biggest impact areas. Innovations for improvement efficiencies, local Indigenous participation. And I'd also say there needs to be further investment in people, systems and tools. And I'll wrap up, but I think the most important is to be authentic and genuine. For each organisation to think, I need to think of what my business does and how I can contribute to ESG across the activities that are done.
Excellent. Thanks for that, Dominic. And yeah, we're definitely seeing, I guess, a change in that in recent years of ESG being, I guess, more of a talking point to now the rubber hitting the road on some operational initiatives. So that's good to hear. Nima, just coming over to you. You touched on some of these before, but how is BHP managing ESG through, I guess, a more technology lens as well?
Yeah, and look, Dominic covered the wide variety of topics that ESG does cover. BHP has taken a pretty public stance on how we approach ESG from a social value mindset rather than that social license to operate view. And increasingly, technology is helping companies at getting better at identifying and quantifying risk. So, I approach it very similarly to a calculation of NPV. Understanding decisions, ESG is critical if a business is to properly assess risk and value of either a project or a strategy. So, looking at that, we want to maximize share and benefits. And some examples of how we're utilizing that technology. I mentioned circular before, but people may have seen the article where we are using blockchain to better understand our supply chains. And we do that to maintain transparency on how ethical or green our supply chain is. Personally, I could foresee this trend to continue to the point where companies and commodities are scored on ESG performance, like energy and water efficiency ratings on appliances. Of course, technology is also really well used to help us monitor and understand employee and company engagement as well. And even so, that area is evolving with the rise of the metaverse. So companies that focus on ESG obviously have a competitive advantage today. So touching, I did see a question there from Dale. I think in the past, we as commodity owners and traders, we basically didn't actually have any way to market our products besides price. What ESG kind of allows is that level of marketing and branding as well. So there is a financial component there, but it's also about how we make a contribution to the world. So where technology helps us, we'll definitely do that.
Excellent. Thanks, Nima. And I hope that answers your question, Dale. Just for the audience as well, Dale's question was around circular to track mine to ore production and to ensure ESG credentials, and how BHP sees that the market paying for certified green products and how strong the demand is. So I hope that answers that question there. Coming back to you, Dominic, obviously mining and METS, we're not alone, and a number of industries around the world are undergoing the same changes and the same focus on ESG at different speeds. So where can the METS sector look for new approaches to manage these ESG commitments, and what industries can we look to for inspiration?
Yeah, thanks, Sheldon. Great question. Look, the infrastructure sector, so I'm talking public sector infrastructure, roads, rail, light rail, tunnels, etc., have really been leading the way in this for some time, and that's largely driven by government. In Australia, we've got a well-established framework, which is the Infrastructure Sustainability Council, which basically breaks down all of the ESG or sustainability elements and applies those across design, construction, and operations. So there's some really useful examples and learnings that we can do from that. But I will also say that with a government-driven approach, there's bureaucracy and process tied in with that. So, I think in the work that I do, I find that I draw on that infrastructure sustainability piece, but are continually looking to how we make that leaner, more efficient, and simpler for proponents, but also for the supply chain. And so, when I look at the learnings, infrastructure sector, but I think we can also learn a lot from within the resource and energy sector as well. And there's so many terrific examples. Chris touched on the Charge on Innovation Challenge. as an opportunity for collaboration, and obviously stuff that the big players are doing, like BHP, you know, sets the benchmark and the example. And I think the other comment on that is that if it can be done well, it really does create a competitive advantage for all organisations across the value chain. That's with respect to clients and winning more work. It's also related to staff attraction and retention, and then also attracting investors. So plenty to learn from elsewhere, but also from within the sector.
Excellent. Thanks a lot for that, Dominic. And a question here from Marianne, and I'll probably come back to yourself and probably Peter for this question as well. So she asked, for the METS companies on the panel, can they share any examples of miners shifting ESG/decarbonisation goals to suppliers?
Almost all clients that we work with are doing this. So we're currently doing work with the big mining players as well as the mid-tier and some of the juniors as well. So I can't necessarily mention names, but there is a strong drive to push those down because, you know, go back, say, 10 years ago when there was a desire to reduce emissions, it was just a reduction. But now it's a wholesale elimination, for example, of emissions. So that has to touch every part of the value chain. BHP can invest in renewables and electrification of fleet, but that doesn't cover all of the associated emissions from BHP. So therefore, we're going to see it cascading down. And in particular, I think the social element as well. There's a massive role, and we're seeing those commitments that are made to traditional owners and to communities around employment, business opportunities are being pushed down. So it's happening everywhere in my experience.
Excellent. Thanks a lot for that, Dominic. And Peter, do you have anything to add on that in your dealings as a METS organisation?
Yeah, look, we're haven't been in the position of having, I guess, ESG obligations pushed down to us or passed through to us, but we are certainly seeing an increase in companies looking for technology solutions to help get those outcomes. I do a lot of work with one of our partners, Petra Data Science, and they do a lot of solutions around optimizing various parts of the value chain, and they're getting a lot of inquiries for companies that would like to look at water use or energy use or emissions, carbon emissions. Crushing and grinding is a major consumer of energy on a mine, and small increments of improvement there can make a big impact on the carbon footprint, the energy use. So we are starting to see companies take note of technology's ability to make a difference in that space, which is great to see.
Fantastic. That's great news, and certainly echoes what we're seeing here at Austmine. That is all the time that we have for today. That does take us up to 1:15 Sydney time. So I would like to say a big thank you to the panel for your insights, and to the audience. Thanks a lot for joining. We hope that that's addressed some of your key questions and key considerations for the year ahead in the METS sector. Certainly an exciting time full of opportunities, but also some challenges there to work collectively and manage as an industry. Just before we go, if we could just go to the next slide, I just want to draw your attention with the country opening up. It's full steam ahead back to our networking events, which is great news for me in particular because I'm a bit trained of webinars in the last few years. But you can see there on some great networking events coming up around the country. So we hope that you can join us there. We also do have a great list of webinars coming up that you can find on our events page, of course. But once again, thanks a lot to the panel today. Exceptional insights. I've got about 3 pages of notes that I look forward to looking back on later. Thanks to the audience, and we'll see you at the next Austmine webinar. Stay safe, everyone. Bye.